I'm Jennifer Beeston. Today I want to talk to you about how lenders look at non-guaranteed income. So first you're like, what in the world is non-guaranteed income? I don't know. I mean, it's kind of a silly title, right? Okay, so non-guaranteed income examples would be a bonus. Most people aren't guaranteed a bonus. It's usually based on performance of either themselves or their company. Another non-guaranteed source of income would be overtime. Most jobs do not guarantee that you'll get a specific amount of overtime. And the third non-guaranteed type of income is commission. So anyone who is a commission employee, they get paid based on their performance every single month. Yay! And that's great. So here's the way to think about it if you're buying a home. So what happens a lot is maybe someone fills out an online app, or the lender doesn't ask the question, but let's say that in 2015 you didn't get any overtime. In 2016 you got a little, and now you got $40,000 this year in overtime. Yeah, we can't use that all. So what lenders are looking for is they're going to be doing a 2-year average of your income. So they're going to be looking year to date all the way back so that we have a whole 2 years, and then we're going to be averaging that income. Okay, so you need to know that going in, because often people are like, well, I'm making $2,000 a month in overtime and you're only giving me $1,000 a month. And I'm like, well, yeah, that's because last year you were only making $500 a month and I have to do a 2-year average. So you want to know that that's what a lender is going to be looking for. Same thing with commission, same thing with bonus. Now there is one trick to this, and you guys aren't going to like this. No one ever does. So if your income is declining, okay, we're going to go with the lowest number. So if your income in 2016 you made $40,000 in overtime, and year to date you've only made $5,000, we're most likely going to be using just that $5,000. Okay, and the reason is that we're looking for patterns, but if the pattern is going down, we use that lowest number and we don't average with the highest number. Okay, lenders are always looking to make sure you can make your payment. That's what you have to remember, because sometimes people get really upset and they're like, well, this isn't fair, this is what I make now. And it's like, I get that that's what you make now, but you've just got to know the lenders have to be able to justify the amount of income you're using so that you don't end up in a bad position. And if you made $40,000 last year in overtime, but year to date you've only made $5,000, I mean, gosh, if we qualified you off of $40,000, like, how would you have made your payment the first few months of the year unless you had huge savings? So just for you to know, if you need your overtime or your bonus to qualify, I generally try to qualify people without overtime or bonus, because I have the basic theory on finance that it's always better to buy a little bit underneath what you can actually qualify. If we need to add it in, we'll throw it in, but generally if you can find a house that you like without using your bonus or your overtime, that's a really good thing for your long-term financial future. Commission's a totally different ball game. So if you're new to the commission industry and you've been getting it for 6 months and it's going great, that's great. Congratulations. I'm super happy for you. 2 years. 2 years. We need 2 years. So if you have questions, if you're in any of these positions and wondering how you should be qualified or how a lender would look at it, or you want more information, please give me a call or an email or reach out to someone on my team and we will be happy to help you. Thank you for taking the time to watch. I do appreciate it.